Indian people have this cultural tendency to love gold. When somebody gets married, you gift gold. When somebody has a baby, you gift gold. When somebody has extra cash laying around, you turn that cash into gold. Now, although this is just a tradition, there's actually some very important financial significance to this that we can all learn from. I'll show you. This is a chart directly from the Federal Reserve Bank showing the purchasing power of a dollar from 1913 until now. And what you'll see is that between 1913 and now, it was almost a straight line downwards in terms of purchasing power of the dollar. Over the last 100 or so years, the dollar has lost more than 90% of its purchasing power. Now, the reason why the dollar has lost so much purchasing power between 1913 and now is because, well, a couple of things happened. Number one, in 1913, the Federal Reserve Bank was created. That was the central bank here in the United States. And then in 1971, that was when the dollar was taken off of the gold standard, which created the ability for the Federal Reserve Bank to essentially print money out of thin air. So now, as you can print more money, the value of each individual dollar goes down. And between 1913 and now, the United States government with the Federal Reserve Bank have worked to print a lot of money, which has devalued the dollar. That's why over the last 100 or so years, we have seen the dollar lose more than 90% of its purchasing power. And now if we take a look at this, this is a chart showing the prices of gold for about the last 100 years. And what you'll see is that although gold prices didn't go straight up, there was a lot of volatility with gold prices crashing and gold prices booming. Gold prices are a lot higher today than they were 100 years ago relative to the US dollar. Now, the interesting and tricky part here is when you're comparing the prices of gold with something like the price of the dollar, what you have to remember is that the value of gold doesn't inherently change, right? The gold isn't going out and producing value. It's not something that's going out and generating cash flow. Your gold is sitting there in a vault. It's sitting there. It's looking back at you. It's not really doing anything. But the reason why gold prices have changed is because the amount of dollars it takes to go out and buy that gold have gone up. And the primary reason why you need more dollars today to go out and buy some gold as opposed to 100 years ago is because the value of each individual dollar has fallen, which has resulted in the prices of gold rising. Now, does this mean the gold prices go straight up? No, you can look at the charts. You've seen big fluctuations in prices of gold, but you can start to see that how gold can be a hedge against this type of inflation. And now if we go a little bit deeper into the traditional Indian mentality, what causes people in India to want to go out and want to buy gold? What causes an Indian person to want to buy gold with their currency? Well, take a look. Over the last 50 years, India's inflation rate has averaged over 7%. And remember, that's just the reported number. Now, to put that 7% sum inflation in perspective, the Federal Reserve Bank has set an inflation target in the United States to 2%. The Federal Reserve Bank wants 2% inflation in the United States, while India is seeing over 7% average inflation historically. That's more than double the inflation that the United States has seen over the last 50 years, which means the currency of India, the rupee, is losing value much faster than the dollar has lost value. So now what happens when you're in a country where you have much bigger inflationary issues? You don't want to just keep holding on to that currency because you know intuitively, even if you're not very financially educated, that you're going to need a lot more of this currency to buy groceries in the next year or two. So you want to convert this currency that's losing value into something that has a little bit more value, something like physical gold. But then the next mistake that people make is they don't understand how gold actually should play a part in their entire investment portfolio. And this is the part where I think a lot of people can kind of agree that, oh yeah, there's value in wanting to convert a weak currency into something like physical gold because it can protect you against things like inflation, and gold is a better hedge against inflation than a weak paper currency. This part I think most people can understand and agree with. But the next part gets a little bit tricky. But before we get into that, I do want to let you know that if you are interested in learning to build your financial education, if you are interested in learning more about how to invest your money smartly, my team at Briefs Media wrote a free ebook titled How to Build Wealth as an Investor, and you can get a copy of this ebook for free. All you got to do is click the link down in the description below or go to briefs.co/ebook. That way you can get a copy of this ebook for yourself for free and start learning about how you can build your financial education as well. Let's just assume that you had $1 million of cash sitting in your bank account right now. You could do a lot of things with $1 million. You can go out and go shopping and spend that money, which really is not an investment. Or you can keep that money in cash, but that cash loses value. We've seen that happen. Or now you can take this cash and invest it. But where can you invest it? If you go and take the cash and invest it in real estate, you find a good apartment complex, maybe if you've invested in a good area, you will be able to see appreciation. Maybe that $1 million apartment complex will be worth $2 million in a decade. And if you buy it correctly, it'll also put some money in your pocket every single month and every single year. Maybe you'll put in $50,000 to $70,000 a year into your pocket because you bought a good rental property, and hopefully that property value is going up. That's the goal with buying real estate. If you go out and take this money and put it into the stock market, maybe that $1 million will be worth $1.5 million in a few years because you put this money into good stocks and you saw the stock market grow. If you took that money and you put it into your own business, maybe you can see that $1 million turn into $10 million because you're investing it into yourself and you're trying to produce more value. In each one of these places, in real estate, in stocks, into your own business, you're investing it into something that's producing value. That real estate is producing value because people can live or use that property that you purchased. Your stocks are creating value because you're investing in companies that are selling products and goods, trying to produce more value for their shareholders and their customers. And your own business is producing value because if you start a business selling guacamole, that's valuable because people want guacamole. That's a pretty good commodity as well. So these all produce value. But what about the gold that you're investing in? And gold has a very different type of value. Now, sure, there are tangible uses to gold. Like gold can be used in jewelry. Gold can be used in electronics. There are tangible uses to gold. But when most people go out and buy gold as an investment or an alternative form of savings, as I like to say it, it's usually not providing value. Like I own physical gold, but my gold is not producing any cash flow. It's not producing any value. It just sits there. So what is the purpose of the gold that I own? And for me, and I'm not telling you what to do. I can't tell you what to do. I don't recommend what I do to anybody else. I'm just going to tell you what I do. I have a small piece of gold in my total investment portfolio. Gold makes up about 2% of my total investment portfolio. That's it. But why gold? Gold for me is a type of hedge. But what type of hedge? It's a hedge against doomsday insurance. It's like a doomsday insurance, I should say. Because if things go really wrong, if we see bad things happen in the world, well, what we have seen happen throughout history is that gold has been the universal currency for thousands of years, number one. Number two is that there's a limited supply of gold in the world. And number three is that it takes effort to actually get that gold. It takes time, effort, and labor to go out and physically mine that gold. And that representation of that effort is seen in the price of gold. So now my theory is that if I have $10,000 of extra cash and I buried that cash in my backyard, and then I also buried $10,000 worth of gold today, my theory is that in 10 years, that $10,000 worth of gold would have more buying power than the $10,000 worth of cash. Why? Because we know that cash loses value. Why? Because of inflation. As long as the government keeps spending money they don't have and the Federal Reserve Bank keeps financing the spending through money printing, that's going to continue to create inflation. As you continue to create more inflation, that devalues the dollar. As you devalue the dollar, that also creates more price or a higher price for gold because that means you need more dollars to go out and buy that gold. Now, is this guaranteed? No. We've seen gold prices go up and down. But for me, it's an alternative way to save money. That's why I look at gold almost like a hard form of money. And that's why for me, I just have a regular system that I buy a little bit of physical gold every single month. I don't buy paper gold. I don't like the gold certificates. I buy a little bit of physical gold every single month. I have an automated system that allows me to do that as a kind of protection. Now, today, you have a lot of people saying, well, you don't need gold, you need Bitcoin. The problem with that is, well, Bitcoin hasn't proven itself for centuries yet to see kind of how it's going to play out over time. Now, I own Bitcoin, kind of like how I own gold, but for me, that Bitcoin is more speculative, and I don't know what's going to happen with Bitcoin in the next 10, 20, 30, 40, 50, 60, 70, 100 years. But I own Bitcoin because I don't know what's going to happen. And for me, I understand that it's risky. It could go down to zero, and I'm okay accepting that risk. However, gold has a time-tested value where it's been around for centuries, thousands of years, and it's been used as a currency way longer than Bitcoin has. I'm not saying Bitcoin is bad. I'm saying I just own both because I don't know what's going to be happening in 10, 20, 30, 40, or 50 years. But this is where what I want you to remember is that one of the things that we understand about this economic system is that our economic system is designed to produce inflation. How does inflation happen? When you increase demand by increasing the monetary supply. How does the monetary supply get increased? Meaning, how do we increase the amount of dollars out there? Well, the primary way that we've seen this happen is when the government keeps spending money they don't have. Because when the government keeps spending money they don't have, somebody's got to finance that spending. And how are we financing that spending? Through Federal Reserve Bank money printing. And if that process continues, which as of today, it looks like that process will continue because the government is not cutting down spending and the Federal Reserve Bank keeps printing whatever needs to be printed. And if we continue down that system, we know that we will continue to see inflation. I mean, the Federal Reserve Bank says that their target is 2% inflation, not 0% inflation. So we know that we're going to continue seeing inflation. And if we continue seeing inflation, we know that that is going to continue causing the devaluation of the dollar. And if we continue seeing more devaluation of the dollar, well, in theory, that should continue to hold price stability for physical gold. Now, is that guaranteed? No, but that's kind of the way the system works. And over the long term, we've seen that gold prices have gone up relative to the dollar over the last 100 years. There are 7 habits keeping the majority of Americans financially poor. And if you stick with me until the end of this video, not only are you going to understand what these habits are, but you're going to understand what not to do that we can continue building your wealth and not end up like the majority of Americans. Number 1 is you drive a car so expensive that you can't afford the gas. Yesterday, I was on the phone with somebody who works with me out in Miami,